Well, the benefit of what we call the non-traditional forms of financing are that it really is an additional pool of capital that miners can access. You know, we've traditionally had equity and debt, and the non-traditional forms of financing like streaming and royalties and the like really sit in the middle there, somewhere between the two. And it really is opening up a whole new world of investors into your company that may not normally be there for either debt or equity. Well, not enough source from non-traditional mining investments, if you ask me, but it's increasing. It's been very popular in North America, in Canada and specifically, and there have been a number of deals done in Australia, but it hasn't really taken off as well in Australia as it has in North America, but that's starting to change. We've just seen a couple of quite substantial deals done on the streaming side in this part of the world with Australian domiciled and listed companies, and so we're seeing it increasing. There was one done recently for Highlands Pacific and another one done by Ryan Mine Finance with Heron Resources for their Woodlawn mine. So we think it's really starting to finally get some traction in the Australian market. So some of the non-traditional finances, some of the non-traditional sources are becoming more traditional, like streaming and royalty finance. And there are also actually a lot of specialty debt funds which are also providing similar types of transactions. A stream and a royalty are essentially the same thing, where we take a percentage of the income or a percentage of the commodity output in return for an upfront investment, but they're structured slightly differently. But they are really another way to access capital. In Australia, it's probably been slightly hesitant to accept non-traditional sources of funding, and that's primarily because we've had an open stock exchange. The ASX has been open, we've had banks that have been willing to lend, but as that's sort of become a little bit more difficult to access, then yes, the Australian market has certainly become more open to non-traditional financing. Generally moving from the exploration into the development phase. That's really the more applicable area for these financing tools. No, I don't think there is a greater risk for miners. Quite the opposite. I think it's better to have multiple sources of financing rather than relying on single or just two sources of funding. And so the more people you can have investing in your project, the more people that will be out there putting your project forward to their investors as a marketing for your own project. So I actually think it's quite positive. Well, it's a great conference. You know, I've had a lot of discussions here today across a range of different topics, and with a range of different investors and different service providers and companies. And there's some really good companies here that are doing some very exciting things.